The dollar yen has been on a wild ride, a true battlefield for traders with sharp moves in both directions. After all this volatility, the big question is, what's next? Are the bulls about to charge, or are the bears taking over? Let's break down what the charts are telling us. The overall market picture is intensely conflicted. We saw an initial wave of optimism, with the pair pushing up aggressively to challenge a major resistance zone right around the 149.00 level. Some technical analysis even pointed towards a significant breakout, with potential targets as high as 151.0, suggesting the broader uptrend was set to continue. However, the bears responded with force. That push towards 149.0 was met with a wall of selling pressure. This triggered a dramatic reversal, with prices plunging sharply. The pair sliced down through the 1480 handle, with the decline only finding its footing in the mid-147s. This aggressive rejection from the highs has injected a heavy dose of caution into the market. So, where are the key inflection points to watch? The area between 149.00 and 149.10 has clearly established itself as a formidable selling zone. It's the line in the sand that bulls need to overcome. On the downside, support seems to be forming around the 147.50 level. This is where the sellers ran out of steam. A convincing break below this support could open the door for a much deeper correction. For the bulls to regain momentum, they first need to reclaim the 148.65 area before making another attempt at that critical 14900 ceiling. So, to summarize the key takeaways, the market is in a state of high tension. A strong, longer-term uptrend is facing a fierce, short-term bearish reversal. The sentiment is mixed, leaning towards caution after that sharp price drop. The direction from here will likely be decided by a break of one of two key levels, the 1490 resistance on the upside or the 147.50 support on the downside. Whichever gives way first could signal the next major move for the dollar yen. Stay sharp in these choppy markets.